Yesterday, Janet Yellen warned the American people that the U.S. dollar is doomed. Is the U.S. even trying to stop de-dollarization? Can it even stop it? Yesterday, Janet Yellen said some of the quiet parts out loud as the Treasury Secretary warned the American people should, quote, expect over time a steady decline in the dollar as the global reserve currency. In testimony before Congress, she was asked about threats to the dollar from the administration's unprecedented weaponization of the dollar as a political tool, most dramatically the seizure of the Russian central bank's sovereign dollars in hopes of sparking a bank crisis. It didn't work. Actually, our banks failed. Note, we didn't even do that during the Cold War because it breaks a sacred trust that the dollar will be there when you need it for all countries. Yellen first waved it off, saying countries targeted by sanctions are obviously going to avoid the dollar. By the way, they didn't used to do that because even pariah countries need stable and liquid stores of value. Recall Iran's pallets of US dollars. The questioner then noted that even friendly countries, including France and BRICS adjacent and petrodollar pillar, Saudi Arabia, are avoiding the dollar. At which point, Yellen admitted, yes, that's true, but she added that most countries are trapped, so tough luck. In her words, quote, there is no meaningful workaround to using the dollar for most countries. But what broke our corner of the internet is what she said next, that she expects the dollar to continue losing reserve share since there is a, quote, natural tendency for a growing world to diversify. This is a striking level of historical ignorance from one of the two people tasked with safeguarding the dollar as reserve currency. After all, the world economy has, in fact, been growing for about 300 years since the Industrial Revolution. And through those 300 years, there was no natural tendency to diversify. In fact, there was a tendency to concentrate in a single reserve asset, first the British pound and then the American dollar. Why? Because reserve demand has nothing to do with growing or shrinking worlds. It is built on the currency's ability to store value and its liquidity or transaction costs. Surely Yellen knows this. She has a PhD from Yale. She taught at Harvard. She's been both Fed chair and Treasury Secretary. Indeed, she's married to a Nobel economist. In other words, she is lying. She knows there is no natural tendency to lose reserve currency. That's something you have to lose yourself. On the contrary, that natural tendency to concentrate is the whole point of having a reserve currency. In fact, it's the point she bragged about in the previous sentence about meaningful workarounds for all the weak countries that the U.S. can bully. China, of course, is doing everything it can to provide that, quote, meaningful workaround, while, going by Yellen's speech, the U.S. is not going to do anything about it. Ever since I started these videos 3 months ago, I've been warning of threats to the dollar's reserve currency status. If this happens, the many trillions of spare dollars parked all around the world would come rushing home. That could set off double-digit inflation that could last for years. The dollar ultimately could lose half its value, which would mean a wrenching depression, the likes of which we have not seen in a century. At the moment, we are on the edge of a 1970s economy. If we lose reserve currency status, it could be closer to the 1930s, and the U.S. government doesn't seem too interested in stopping that. Okay, we'll be watching. See you next time.